Hey guys, welcome back to my channel. So I'm here to show you all a little update for my Robinhood dividend portfolio for the month of August. Year to date, August has been my best month in terms of dividend income. I also added some positions and I also got rid of other positions because I felt like I was too overweight in one sector. So my first dividend payment for the month of August was from Bristol Myers Squibb. I have 20 shares. I had 20 shares and they paid out 41 cents per share, totaling $8.20. So I did get rid of my position in BMY. Bristol Myers Squibb had made up a little bit less than 10% of my portfolio, and right now in the healthcare space, I believe there are a lot of good companies that are trading at pretty low prices at the moment. When it comes to pharmaceutical companies, it's more of a risk because these companies rely on a blockbuster drug to keep the stock doing well. So with BMY currently yielding 3.5% and another pharmaceutical company like AbbVie, which is yielding 6.34% as a pure long-term bet, I feel like in the meantime, I would rather collect on a higher dividend yield in a more risky sector like the healthcare space. And two other stocks that I'm also keeping an eye on are Pfizer, which is trading near a 52-week low, yielding a 4.1% dividend yield, and J&J trading at the lower end of its 52-week average with a 2.9% dividend. The next stock that paid me for the month was AT&T. So AT&T paid out 51 cents per share. I have 16 shares totaling $8.16. Recently, AT&T has been one of those stocks that I wish I would have bought more of. With mixed second quarter results, AT&T has been able to rise about 5% due to its company dedication to significantly reducing its debt by the end of the year, along with the 5G boom of making commercial 5G available by the end of 2020. With a current dividend yield of 5.26%, I still think AT&T is at a good buying point, but with all the uncertainty in the market, I'm holding off on buying AT&T in hopes of it dropping down so I can add more into my position. I want to at least have $1,000 into AT&T for my portfolio. Now the next stock that paid me for the month of August was CVS. Now CVS paid out 50 cents per share for, I have a total of 17 shares for a total of $8.50. This past year, CVS has been down more than 20% from its highs. With its purchase of Aetna in late 2018 and a continuous debt reduction, I believe that CVS is poised to increase its dividend in the coming years as with its synergies with Aetna and debt reduction come to light. Now the next stock that paid out for the month of August was AGNC. AGNC paid out 16 cents per share. I had a total of 5 shares totaling 80 cents. Now, I officially sold off in my position in AGNC. I typically don't like these type of stocks very much because what you receive in dividends, you end up losing in terms of capital gains. And I think these stocks might have a place in someone's portfolio, but it's just not for me. Now, I think these high-yielding stocks might have a place in my Roth IRA where your annual contributions are limited, and that is why I am thinking about adding a small portion of these stocks into my Roth IRA and M1 Finance. The next stock that paid me out was AbbVie. This past week, I added more to my position. I bought 5 shares of AbbVie at $68.35, and I plan to continue to average in my position. I plan on relocating some of my funds that I sold off from Bristol Myers Squibb into AbbVie to align my portfolio with about a 10% exposure into the healthcare sector. Now, the next stock that was paid out was Apple. Apple paid out 77 cents per share for, I have a total of 15 shares and they paid out $11.55 for me. So now I'm currently down in my position, not by very much, but with these huge blue chip tech stocks, their balance sheets tend to look the best out of all the industries, which makes investing into these type of companies a good long-term bet. But with Apple, if the trade wars end up getting worse, and by worse I mean not even Trump will be able to play it down, just recently, he stated that American consumers will start being affected. And as a company, you have two options when something like this happens. You can absorb the cost or you can pass it on to the consumer. Both ways end up hurting the company as a whole, so there is no win-win. With a company like Apple and Microsoft that get a good amount of their revenues and manufacturing from China, this can really hurt these companies. For this reason, if my position in Apple goes positive, I will consider trimming my position in Apple and waiting for a better entry point than what it is now. After Apple, we have Apple Hospitality REIT, which paid out $2. This is a monthly dividend stock. I think they are at a really good buying point right now, yielding around 7-ish%. I previously stated that I would add to my position if the stock continued to drop to the $15 range, which it's currently at right now. But I have since changed direction on that. Now, with all this talk about a recession meaning that the stock market has a drop of 20% from its highs, I don't think that this will be a very good stock to hold. I do not think that we will go into recession. Germany, on the other hand, being a different story. But a lot of people generally are aware of the current political climate, and given that a lot of consumers are not rational, I feel like all this talk about a recession can lead to a self-fulfilling prophecy which will cause consumers to spend less. For that reason, I am staying away from it at least until December, till we get more clarity on what's going to happen with the China trade war ordeal. Next, we have ET Energy Transfer. They are an energy transportation company that operates in the US and China. They move natural gas through their pipelines, and right now they currently yield an 8.92% dividend yield. Lastly, we have Caterpillar. They paid out $1.03 per share. I have a total of 7 shares, paying out a total of $7.21. They currently yield an impressive 3.5 dividend yield, which has been trending down for the last few months. Stock price. The reason for this is because Caterpillar brings in about 47% of their revenues from outside of the United States, and of that 40%, China makes up their largest growth area. I think this is a very volatile stock to own in the short term because of the China trade war, but offers a good value for long-term investors, and that is why I am going to add to my position if this does end up getting lower. So as you can see here, guys, I was paid out $56.36 for the month of August. Year to date, I've been paid $207.71. As I said earlier, August has been my best month. Not saying that it can happen, but hopefully I can reach a month where I receive $100 in dividends. I have just I have 4 months left to go before that. But my end of the year goal, I think it was somewhere around, what was it, like $500. I'm very off at the moment, but hopefully I'll be able to reach that with some other acquisitions I purchased during the coming months. Okay, guys, and that's a recap of my dividend income for the month of August. If y'all like the video, make sure to like and subscribe, and do that other stuff that YouTubers always say at the end of the videos. And I'll see y'all next time.